Hey, Billy and Becky Epperhart here. This is our first Wednesday night live stream, honey, that we've been doing.
Middle of the week.
Middle of the week, and we've been doing actually Saturday mornings at 10 a.m.
Mm-hmm.
We're not going to be doing Saturday mornings anymore. Becky will be sharing some of that with you. But we just want to welcome you to this Wealth Builders Live. And so right now, all of our Wealth Builders Live, just so you know, have moved to Wednesday night at 6 p.m. Mountain Standard Time. And honey, we're excited. I know we have a lot of things that are going on, but first of all, I want to welcome Karen Conrad. She's on the live stream with us tonight. Hey, Karen.
Hello. Thanks for joining us tonight.
And tonight it's just us and Karen.
Us three.
I'm going to talk about real estate. We'll be sharing some of that with you. Karen and Miss Becky are going to help me with that process. And but first, we've got some things we want to share.
We do.
With everyone who is being a part of this.
We always have to get the announcements out of the way. First off, I'd like to say welcome. We've been missing you guys. Last week we had you on the live stream, but we didn't get to interact any.
No, that was part. And listen, the workshop last Saturday was phenomenal, and it was Friday, Saturday, and Sunday. And it was incredible. We had a lot of people who participated on the live stream, and we want everybody to know how much we appreciate that did participate with us during that time. And we opened it up at 10 a.m. last Saturday to anyone who wanted to tune in. So it was awesome.
It was. And so we'll just jump right in. And if you'd like to see that, you can go on to wealthbuilders.org. And you can catch the live stream. You go to the main page. They made this real simple for me. Go to the main page, locate the banner for the live streams, and click to watch. And if you don't want to do that, then you can catch us on YouTube. Did you know you're on YouTube?
I did not, but I'm learning.
You're on YouTube. And so either one of those, we had a lot of fun. And I'm telling you, we even left the bloopers in. So that was amazing. Karen and I had to forge through a windstorm. And so it was.
Oh, yeah, downstairs.
Oh, my gosh. It was so.
And I got a muscle cramp while I was teaching in my leg.
Yes.
And
you have got to go on and watch this. It was totally live.
That was bad. That was, anyway. Praise the Lord.
I know. Praise God. Anyway, if you'd like to keep up to date on our events, access the blogs, and much more, you can go to wealthbuilders.org and get all of that. If you subscribe today to Wealth Builders website, or if you've already subscribed, then you will receive the link to the free, listen to this, to the free chapter of Billy's Real Estate Mastery Workbook on keys to finding bargain properties.
Wow, that's a deal.
I think that's kind of a hot topic right now.
Yep.
And this link will come to you in the email, so watch for it. And we already talked about the previous week live stream. You can go to the website there. Also, this is real exciting. Our next workshop is the Business Mastery Workshop. And I went to the last one and I even learned something.
Did you?
Yeah, it's a lot of fun. It's a lot of fun, and they even break it down, and you get to do little trial by error things. But
really, on a serious note, that the real estate workshop is, we really have an opportunity. We have Karen who's joining us.
This is
the business. Business workshop. I apologize. We have Karen and her husband, Dave.
Which is a great speaker.
He's an awesome speaker, and he knows what he's talking about. And then I think we have Chris Bernard that joins us for that. Of course, we're there, and we're part of that. And so really, it's if we go deep. In other words, we go down deep in the area of business, really teaching you things you need to know.
And it's very interactive.
Very interactive.
And that will be on August the 28th through the 30th. And we're planning on being there in person and live. But if we sell out, you can still get, I don't know, are we doing live streaming on this one, Karen? We are, yay, we're doing so many things now. I don't know what we're doing. But anyway, the special ticket price is $647. The normal price is $997. Ooh, us ladies like a discount. That's $250 off. You need to go and get that now. So anyway, that's August the 28th through the 30th. Also, our giveaway tonight is going to be, We've been talking about this. This is the real estate workshop live stream. The whole shebang, Karen? Oh my gosh.
So they
That's
get
24 sessions,
Yes.
all the PowerPoints, all the notes, and all the bloopers. If you're the winner, you get all of that.
It
If
is
you'd like to,
loaded.
yes, if you'd like to purchase it, because we're talking so much about it, you can go to wealthbuilders.org,
I didn't know they were doing that.
go to shop, and you can buy that for $3.99. So there's a lot to that. So to be eligible, you just go to the website and subscribe. And if you're already on our email list, you're already automatic in the drawing. I
Wow.
like that.
Man, that works.
So you have a chance every week if you're already subscribing. That makes you go up.
Wow.
Also, if you like to interact, which we love, we get so much out of you asking these questions. You can go live to the chat on Zoom, or you can go to the comment section on Facebook. Please do that. We really do get a lot, and it really does. Karen and I were just talking before we came on live that you're at your best when you answer live questions.
Live
I
questions.
think.
We're going to do live questions tonight.
I know. I like it. So that's it. That's all of the
Well,
announcements. It's your turn.
Well, we just want to say that we're excited that we're actually on tonight because we almost weren't. And so we were not. That's how you say it. We were almost not on. We were at our home here in Woodland Park.
And we had a storm
And
last night,
we had a
and the
storm,
internet is.
and we think it affects. So we're now at our office here at Andrew Womack Ministries, the headquarters in Woodland Park, Colorado. And and the internet's good here, praise the Lord. So we're not having any problems with the internet. We're going to put up some of the, quickly, we're going to just do several charts and a couple things and then share a few things with you. Now tonight, for me, of course, most of you who know us know that we do a lot of teaching on real estate, but I've been talking a lot about the stock market. I've been talking about other things during this COVID crisis. That has to do with business, finance, investing. Tonight, I'm going to focus a little more on real estate and answer your questions just generally, whatever business, investing, stock market, and of course, real estate questions you may have. We're going to talk about that. But let's just look at a couple of the graphs we started with. We're going to look at the March the 20th, which is where all this started. And you see there on the right side of the graph how quick the market came down. This is actually March the 20th, 2020. The real bottom was March the 23rd. And then we show you March the 27th. It didn't take long. It was just a couple of days later, it bounced back up on March the 27th. So we've been showing you this. And now I'm going to show you a graph that's actually as of today. This is today. And you see June the 24th, 2020. And I want you to see kind of in that all the way over to the far right, you can see how that the market has recently been staying right there for about, as many as 8 or 9 trading days. It's actually been staying right at the 200 moving average, 200-day moving average, the black line, and it's been kind of staying there. Now, I don't normally, anytime that I'm talking about things, I usually don't flash some kind of big red warning light. But I just want to say here tonight on the market itself, the stock market, and of course, as I've said many, many times, this is the S&P 500 we're using here when we put these graphs up. I just want to say that I really believe I've been, 6 weeks now, I've been saying this, there's a disconnect from the actual stock market or what we call Wall Street and Main Street. But I want to say this, I think it's even more severe and serious. I think the market has completely lost all reality. And at some point, I believe here in the near future that we're going to see some effects negatively where the market's actually going to go down. And I know right now, if you read the news, you follow the news, well, it's because we're discovering there's still some virus out there. But really, the truth is, I believe, is that fundamentally, when we start looking at the market and we look at it fundamentally, honey, what we're seeing is there's such a disconnect on the financial side. And I've shown many graphs showing how the stimulus has affected the market and all of that. But I think we're actually getting into uncharted territory. The market right now is priced at about 28 times earnings. The average is 15 times earnings. And in addition to that, there are fundamentals underlying the market that have just kind of gone beyond reality. One of those, as you heard me talk about many times, the fundamental is unemployment. And so all of those kind of things really have an impact. Now, tonight, I'm not going to talk about the market, but I'm letting you know that honestly, right now, if you're in the market, and I've said this in most every time I've come on, you know, if I have a 401k or I have a IRA or something, I'm in the market, or I have a brokerage account. Well, right now, I want to tell you that cash is a big asset. Most of the time, we don't tell people because you're looking to make return on your money. But I would be careful right now being too heavily invested in the market. So I want to say that. Now, when it comes to real estate, one of the things that we want to do is just show you some of the things that are happening. And so in the next slide, which I think is slide number 4 and 5, you know, this is missed payments that peaked in May and they remained high in June. And so if you just take a minute to look at this chart for a second that we have, in April, we saw that we had 12%, and this includes people that rent as well as people paying mortgages. And you see that 12% made a partial payment, 12% made no payment. That was in April. Then when we come to May, you see 22% made no payment, 9% made a partial payment. And then if you look in June, we have 19%, honey, that made no payment in June, and then 11% that made a partial payment. Then if we go to the next graph, and I'm trying to show you how the real estate market's being affected. If you go to the next graph here, it's those who struggled to afford housing in May are also struggling, of course, in June as well, again in June. So 83% have made a full June payment. This is as June. But among those that were late in making their May payments, that's the next bar down. We're looking at that when we look at that, 44% have made a partial payment, and then if you look, 24% actually made no payment. So I want you to see that. And then among those who did not complete their May payments, and this is just another way to give you some indication of what's actually happening in the market. Now, with this graph, I put some of the other graphs in here that I covered about 3 weeks ago. I did this on purpose because I'm going to give you some brand new information here in just a second, okay? Brand new information that, of course, this is brand new. I'm showing you tonight, but I'm going to give you some brand new stuff, but I want to set it up. So let's go to the next slide, which would be slide 7. And this is basically the housing market index. And this is from the National Association of Home Builders. And of course, you can see the recessions. Let me do this real quick. Sorry about this on here. You can see where, and let me do this. Sorry about this. Hang on. Sorry, folks. I apologize. Boy, that's a bunch of them, isn't it, honey?
Yeah.
I had a bunch of stuff.
What were you doing? That's all stock stuff.
That's all stock. Hang on here. Sorry. I had all my stock stuff cover up my stuff.
Ah.
So basically, we're looking here at this particular graph, and I just want you to see on the housing market index look at how straight down that is. If you can see that coming down, and really, let me move this over here for a second. Sorry about this. I can't see that. Hey, this is live, everybody. So you know it's actually live. There we go.
That's the only way the upper hearts know how to do it.
And so there we go. So now I can, sorry, I apologize. So, and look at the box in the top left of the graph that says a reading above 50 indicates a favorable outlook on home sales. Below 50 indicates a negative outlook. Now, as I I'm going to show you this because of what I'm about to tell you. Okay. I'm going back to some of these graphs because of something. And so for some of you that have been keeping your powder dry, your cash dry, what I'm about to tell you, I think is going to help you. Then let's go to the next one real quick, just to show you where real estate is again. And then I'm going to comment. This is the monthly supply of houses in the U.S. And you can see over to the right side of the graph once again, and you can see how during COVID, of course, the housing supply has slowed down. And part of that, of course, is people just not listing homes. Mm-hmm. That really is more of the factor, in my opinion, than anything that we've seen. Now, I believe that housing supply, people listing homes, is going to come up, but I'm going to tell you why in a second. And so all these graphs are leading to what I'm about to say. All right, let's go to the next one. If we can go to the next graph, this is new housing units started in the U.S. And again, you can see that going down again. Now, these are new housing starts, not just homes for sale, but new housing starts. And you can see, so we see single family starts in the red, and then of course, total starts for.
That's brand new.
That's brand new. That's right. So this the blue would include condos and other things. Okay. So that you can see that. Now let's look at the next one. And this is the existing home sales. You can see the drop that came down into, I think it's 07, 08, 09. Now let's jump over to 2020, and you can see a drop that's similar. Now, let me tell you what I think where we are. If any of you, and some of you watching, go ahead and ask your questions on this. But if any of you have tried to go get any kind of new purchase mortgage, that means typically when we're referring to a purchase mortgage, it means you have either identified a property that you're going to live in as an owner occupant, or you've identified a property you're going to buy as an investor, and you're considered an investor on that purchase mortgage. You will notice that the money has been tightening up. Now, this is the new information I'm going to give you tonight that's brand new. Kind of inside the industry, in the mortgage industry right now, the people that are issuing mortgages, primarily banks, mm-hmm. that have current mortgages that are out there, they are looking for up to 40% of those mortgage, what they call their book of business. They're looking for at least 40%. They're planning for 40% of that book of business to go into foreclosure.
Really? Oh.
Now, that is a major deal. So that's telling you how disconnected the stock market is right now from the real estate market. So you say to me, and I'm going to talk about some factors that lead into this. So as a serious real estate investor, there's a couple of things on both sides of the coin I want to point out. One is you may have a real opportunity as an investor to buy some homes in that late fall, early into the winter, spring of next year, where foreclosures, 40%. Now, I'm not saying it's going to be 40%. I'm saying when the banks, the mortgage banks, are looking at their book of business, and you say, what does that mean to me? Well, that's why when you go to try to get a refi loan right now on some of your investment property, or for some of you, even trying to get a HELOC on your personal home, you'll notice that the money tightens up. That's number one. Now, what do you do about it? Go visit at least 5 different lenders to see if you can get a sense yourself. So don't just listen to one lender.
Right.
Don't go to one place. And sometimes you might even have to go to some of those small community banks we've talked about. Most of them, including the small community banks, when it comes to your purchase mortgages, they're actually selling that paper back to Fannie Mae and Freddie Mac, and or some other quasi-government that's underwriting it, Sallie Mae, VA. There's a bunch of them. But the point is that you need to shop, because I believe there's still some money in the market to help you, if you need to buy. Now, the flip side of that coin that comes in, if you have renters that are not paying rent and you're an investor, then you need to go look and talk to lenders as well about some kind of mortgage forbearance plan. And the way these municipalities and local governments are responding in this COVID crisis right now is that they have been and most of them have been very tenant friendly and not near as, for example, landlord friendly. And the reason I'm telling you that is that then in that situation, you need to go to the mortgage companies and see if you can get some forbearance during this COVID crisis.
Mm-hmm.
And that means that you don't have to make your principal interest payment. You'll still need to make your insurance payment, but there can even be some forbearance in some cases, even with your escrows. So those are the things that I want to encourage you to do.
Be proactive.
Now, you have to be, and this is the
proactive.
part that I want to say to all the real estate investors. The number one ingredient of a successful real estate investor, and I want you to hear me say this, the number one ingredient is that you become a problem solver. And people that are the most successful in investing in real estate, they don't just take the first thing somebody says to them.
Mm-hmm.
I want you to hear me, that they become a problem solver. They work at it. They go find ways to solve problems. I heard Robert Shooter, some of you don't even know who that is, but a minister many years ago, Robert Shooter said, if a mountain's in front of you, right, you either climb over it, you either bore through it, or you go around it. But you find a way to get on the other side, so to speak,
Mm-hmm.
of the mountain that's facing you. So Becky and I are praying for many of you we know, because we get your comments, we get your questions.
Mm-hmm.
And honey, we know people out there right now are being challenged during this crisis.
Amen. Amen. But this is the time to be proactive, and like I said, is you don't sit around and wait. We call it always shoot and pull behind the 8 ball.
No, yeah, you don't want to be behind the 8 ball. So, because you got to shoot through the 8 ball to be able to hit what you're shooting at. So this is something I just really want to say to you and encourage you in. And I know, and one reason I'm doing this tonight is I can tell by the tenor or the kind of the where the questions are coming from that many of you are facing some of these things. And I want to be realistic with you about those things, but you must be a problem solver in this process, of real estate. So I believe we're going to have some opportunity coming up. Now, I just want to say this from the real estate perspective. I don't know where the economy is going to shake out right now, and the stimulus money and other things that have been there has helped it. But I believe at some point it's going to settle in. Now I'm going to have, when it does, meaning the reality of really what's happening on Main Street is going to settle in. When it does, then we're going to have to address what kind of steps you take. So for some of you right now that are chomping at the bit, so to speak, that's a word, a euphemism we use, but you're chomping at the bit to get into real estate investing. Right now, what I would do is you need to be cautious, and you need to make sure you're following the formulas we teach and look for deals. And if deals aren't there, then you have to be patient. Luke chapter 18, verse 1, Jesus said, let patience possess your soul. And so you have to do that. The Bible says, Hebrews chapter 6 and verse 12, that through faith and patience, they inherited the promises. So I think patience right now is the operative word. Now, right now is a great time to educate yourself. Right. It's a great time. Honestly, it is. I mean that. It really is, because I believe there's some opportunity that's coming. And I can tell you right now, I'm going to take advantage. If some of the stuff that happens that I think is going to happen, I'm telling you, I'm going to be buying some stuff. So you just have to know. And remember, when the Bible says, honey, that the wealth of the wicked is laid up for the righteous, I'm not sure sometimes how the righteous thinks about how that's going to work, right? The transfer of wealth, but God brings that transfer. It's not that other people, that we're trying to harm other people. That's not the point. You know, matter of fact, most of the time when you do deals, you want them to be win-win. But the point is there's a transfer of assets if you know what you're doing and you come in possession of those assets. And honey, you and I know, because we've helped people not too long ago, we helped someone actually buy their first home. And I mean, when I've talked about this before, but we helped them. We helped them. Their other home needed a lot of repair done. We paid for all the repairs to be done. In addition to that, we helped them with the down payment coming into their new home. And so we believe in helping people. We don't take advantage. And then going back historically, when we were really building our portfolios aggressively in those days, we would help sometimes single moms and other people who were hurting financially. In some cases, we're investors, but we actually helped them stay in their homes. Other times they wanted to sell. And so we helped them be able to do that. So I'm not talking about, mistreating somebody or taking the wrong advantage. I'm saying there's going to be realistic win-win opportunities that are going to come to us if this shakes out in the way that I think it might. So there's going to be opportunities.
You have to be smart about it.
Yes, you
can't just run up to the cliff and say, here I go.
Yeah. Now the flip side of this, those of you that I just addressed both sides of the coin, that you own property and you're in that position now, you might do a few things to help you get in another position. And then for those of you that currently own property and maybe say a tenant's not paying, work at being a problem solver and find some of the solutions and things to where you are. And I know, you're wanting to hear from me some of those solutions. One of them is talking directly to your tenants. Say that's not working. The other one is to work on mortgage forbearance. And then the other one is sometimes you can actually look, if you formed an entity and you've been taking any kind of salary out of that entity from your real estate, then the PPP loan that was there, you would be able to take that if you were getting any kind of any kind of 1099 or salary money out of that.
Is it too late for insurance?
What do you mean?
For rental insurance?
No, now, I mean,
non-payment of.
That's a good question, and thank you, because I taught on that the other day.
I remember.
So if you do have lost rents, now it depends on how the actual insurance, the declaration page of your insurance policy, it depends on how that's covered. Most of the time, lost rents are covered when there's something from a hazard insurance perspective, like fire, flood, or something like that. Lost rents cover it.
But non-payment.
But you can check with and most of the time, insurance companies right now are not covering that. But there are some creative policies out there you could get later if you learn from this.
So now would be a good time to start looking.
There's a lot of opportunity that's coming. That's why you got to be a problem solver. So I don't know how long that I've been sharing, but it looks like it's been a little while. So we can go ahead and go to questions. And Karen, are we good there?
We are. Thank you so much, Billy and Becky. That was really helpful. And just a reminder for people, there's 2 ways that you can submit your questions. You can submit it on chat on the Zoom call if you're watching us tonight, and if you're watching us on Facebook social media, go ahead and enter it into the comment section, and we've got a whole team standing by, which we want to thank everybody. Got a great team, Miriam, Gabrielle, and Celine helping us tonight. So we do have several questions, and I'm going to start with this one, Billy and Becky. This came in from chat on Zoom with the delinquencies that you mentioned. Do you think a strong rent and hold market is ahead? And if so, when do you expect it will hit?
The answer is absolutely. And I think there's going to be some great opportunities. Now, there could be some kind of stimulus that nobody has ever seen and could prop things up, and that therefore it's beyond what's currently in the economy, or even what I think is coming currently in the economy. But what will happen is that if in the late fall and into the spring, that we actually, this unemployment, I've been saying all along, Karen, on here, well, if the unemployment continues, now the mortgage banks are actually pricing that in, and they're tightening up on their reserves because they're projecting that there's going to be 40%. That's kind of inside information that had been reported out there. And so that's a huge, in the same way that may hurt some people, it's a huge opportunity for investors. And so late fall, right? And by the way, things can happen fast. You saw where I showed you the market dropped literally in just less than 2 weeks. I mean, it was 2 weeks and it hit the bottom. We haven't had any negative effects, but I think right now we're going to have opportunities. So late fall. And then the other thing is learn all you can about buy and hold, learn all you can about investing, and then make sure you know the formulas and start looking, because there's going to be opportunity. Even some of these folk, Karen, that are living in tight markets where they hadn't been able to get the 1% rent. I can assure you, if some of this stuff happens, there's going to be some properties come available for that kind of thing. So be patient and don't push that envelope unless now if it meets the formulas we're talking about right now, that's fine. But even in areas where the formulas are being met, I promise you there's better deals coming. I believe there's better deals. I better not say I promise. I better say I believe there's a lot better deals coming.
In my opinion.
In my opinion. Yeah.
That's great. Thank you. Okay, this is a great question that came in from Yelena. I hope I'm saying that correctly, Jeffrey. She says, thank you so much for taking my question. And could you guide me where I could get education on foreclosures? My husband and I are debt-free and have been thinking about using our IRA to purchase foreclosure properties or tax liens.
So there's two things there. And I'm assuming, I don't know, Yelena, you know, you want to watch the legal structure if you're going to use your IRA that we have in our program. That's from Bill Broncheck, and that's how it's basically the gist of that is how you actually set up a real estate company as opposed to a real estate property. You set up a real estate company, and that real estate, you invest your IRA in there, then it invests into the individual properties. Because there are laws on the books right now where an IRA as the third person entity can actually own real estate. What you really want is your IRA to own the real estate company, so to speak, fund that company. Now, just so you know, there's really no loans that can be made in there outside of your IRA. And so that's where you have to be a little flush because you're going to be paying cash for those houses. So that was number one. And there was something else I was going to say. Oh, on foreclosures. Sorry. Now on foreclosures, one of the things that you hear me teach and talk about a lot is that the foreclosures are coming, right? They're coming. So depending on how many hit the market, and I don't know yet how that's going to be, I'll have to address that live. But most of the time I like to wait for foreclosures to actually go back to the lender and be listed on the MLS and be listed before I actually bid on them, because I have time to look at them at that point. I also have time to negotiate. Now, if you're going to buy foreclosures at an auction, which let me just tell you, if a bunch of foreclosures hit the market at once, then I might be a buyer at an auction, and I'm usually not. I usually tell people to stay away. But if it's going to be a buyer at an auction, you still use the same formulas. And then if you can't always do this, but if you can, you want to go look at the house to make sure you know what kind of condition it's in. But here's the thing about foreclosures. Let me see if I can get it out. Foreclosures, you still have to use the same buying formulas that we teach when you're buying, meaning how much you're looking to get on rent. Remember, the number one question, I haven't covered this, I don't think, ever on live stream. The number one question you ask about the real estate is not how much is it going to sell for. You ask how much is it going to rent for. That's the number one question. How much is it going to rent for? Then you look at how much it's going to sell for, and that'll tell you whether or not you're really getting a good buy. And so we have bought, I mean, a ton of foreclosures over the years, but I very rarely ever purchased them on the steps of a sheriff's auction. I always waited till they got listed. We call them REOs, real estate owned by the banks. I waited till they become an REO, at a bank, and then I could negotiate. Now, if we have a flood of them,
Because they're ready to get them off their books.
they're ready to get them off their books, I can negotiate. And I always say, you know, I'm a cash buyer, close in 10 days, and you get your financing all set up. In that situation, it puts you in a great position. But the formulas for foreclosures are exactly the same. And so you want to make sure you're buying property there. Now, Karen, you may want to comment on that.
Yeah, I was in banking during the 2008, 2010 situation. And what I was going to add to that is, like, right now, a lot of banks don't want to deal with people directly because their foreclosures are not that significant. However, the delinquency rates that you were showing, Billy and Becky, I mean, I've never seen delinquency rates at that. And I can tell you, being in banking, if a bank hit those delinquency rates, even at that 26%, really anything over 6% is very serious. So this might be the time for you to really go in and establish that relationship with your banker. You know, you don't go in and say, hey, I think you're going to have foreclosures looming here, and so I want to get to know you. It's not that at all. But if you build a relationship and, you know, get your deposit account there, take some time to talk to somebody, let them know about your real estate. There is a time where those foreclosure rates going where they look like they're going, the bank is going to be dealing directly with us as investors.
That's good,
And that's
Karen.
a very good position to be in, because if they can avoid a 6% real estate fee on a property, they will do it. So that would just be my recommendation. And also I've sat
Great
across
recommendation.
from examiners, federal examiners, you know, and having to answer. We were always really clean with our portfolio, but every once in a while, zinger would come up. And let me tell you, as a banker, that is not the discussion you want to have with a federal examiner. So a real position of strength there.
Right.
That's very good,
They
Karen.
know you're shopping, they'll come looking.
Yeah, so I agree with
Absolutely.
that.
And if you can
Totally.
deliver, right, and you've got your deposit account there that they can show this guy's solid, really positive.
Amen.
All
That's good.
right. Very good. So this is kind of, this is a really great question, and this is about financing. This is from Tara Diaz. Tara, thanks for joining us. Tara says, I have an FHA loan at 3.5% fixed interest rate. MPI, which is the mortgage insurance, which is about $225 every month. I do not live in my home, but I rent it out, and I have owned this property since April of 2016. Would it be wise for me to refinance to get rid of the mortgage insurance? The mortgage companies are telling me if I refinance, I will have a higher interest rate than what I have right now because my home is now considered an investment property. I'm wanting to go from an FHA to a conventional loan, but I am wondering, with closing costs and a higher interest rate, if it would actually be worth the transaction.
Well, the question, there's two things you consider, Tara. One is, how much is your closing costs? Because those are, and you know, on the refi, you can roll all those into the refi loan. But then the question, I call it the secret sauce question, is then how much is your payment being reduced? And so it doesn't do you any good to get rid of private mortgage insurance if your payment's actually going up after you refi. So now, you know, the way I look at that kind of thing, if I can save, for example, using the 220 as a guideline, if I can save, say, 150 of that or 125 of that and do a refi, and I think I'm going to keep it, it's a good buy and hold property, then that in itself is kind of a no-brainer, because you're actually putting an extra $125 to $150 a month in your pocket. So Tara, that's the guideline that I would go by. Now you got to consider all your costs, you know, so if you throw all that in, all that's weighed in, roll it all up together, tidy it up, put a bow on it, and you're going to save $125 to $150. If it's less than $100 a month you're saving, you're going to have to really consider how long you plan on keeping that property. And if you're going to, you know, if you say, look, I'm going to keep it forever, then even below $100, up to a point below $100 would be worth it. But my guideline for something like that is in that specific situation, if you're saving 125 to 150, I would do that all day long.
That's great. You know, with FHA too, because I know that Tara would have purchased this property based on a primary dwelling. Just to look at the schedule of when that MPI is scheduled to drop off as well is really important. and you just don't know what sort of scrutiny you might come under with the knowledge of an FHA loan, you moving out and going into an investment property. Right now, if you're making your payments, my guess is that the bank is just going to want to keep you making those payments. But I know at times too, if there is an increase in value in a neighborhood or in an area, and you're able to pull those comps together and show that that is the case, a lot of times you don't have to go through a lot of questions. You just should submit the increased value around you of like properties. They'll review it, and they may just remove that mortgage insurance based on that value. Something to
Well,
think
that's
about.
good. And that's true, Karen, because they may just remove it. So Tara, I hope you heard what Karen said
That's a
there.
win-win.
You know, we call that a desk review. That
Mhm.
means that the actual lender will just do a desk review. They'll go online and just look at the comps right around you and see what that is. And sometimes they'll do a drive-by review, but they can do a desk review, a drive-by review, and that's a really good point. Man, Karen, you're doing good tonight. Man,
Well,
that's
you know,
excellent.
we're in my financing groove here.
Yeah, I know. Well, that's a good thing. Actually, real estate is more finance than it is anything. So, Terry, you may be able to save some serious money. Now, I will say this. FHA itself is not near as friendly historically. They haven't been near as friendly on those desk reviews as what, say, a conventional lender might be. But, however, I would definitely I would find out to see how well they work with you. But that's way better, Tara, than even trying to refi, because then you just lose the 220. You're saving 220 a month. And how they do that, Karen, so she knows, they're actually going in and they're doing a desk review to determine what the appraisal of your home is. And then they look at that 80% loan to value. And so this is good information to have. If you get to what we call an 80% loan to value, that means if you have a $100,000 house, you're going to refi it and you don't have to borrow any more than $80,000. Or if you have a $200,000 house and you don't have to borrow more than $160,000, then what that means is the private mortgage insurance goes off the property. They do a desk review of that, and you just completely lose that payment because your house has gone up. And my guess is in most areas, not every area, but most areas, if you've owned the house since 2016, you would have that kind of appreciation. You'd be close. I mean, depending on where you are, some areas you're going to be well north of it, but in some areas, you know, you might be close. So I would check on that, and just remember that number, that guideline is 80%. To get rid of mortgage insurance is 80%. So that means your house, they would loan you up to what the 80% of the appraised value of the home is.
That's awesome. Thank you so much. All right, this question is from Kurt Deniz. He and his wife, Michelle, are new coaching clients. And so we're just so
Hey,
happy to have
welcome.
them
Welcome,
on.
Kurt.
And Kurt's got a great question here. He says, so I recently moved my cash to a Ameritrade low risk investments. Are
Okay.
you saying I should pull it out and keep the cash ready?
No, I think if you're in a low risk investment for the current market, I think you're fine. And Kurt, I don't know if you're holding that in a regular brokerage account or in an IRA. Did he say in there, Karen?
It's a regular brokerage account.
So if it's a regular brokerage account, you're totally fine there,
Just be
because
patient.
that what you described as where you're holding, as long as it's low risk in the current market environment, just so we're clear, and I believe based on what you're saying it is, then you know you're able to sell that and liquidate if you need it, you know, really immediately. And so right now, I think you're fine, Kurt, being there. Now, if you're in the coaching program, I'll really talk about how you manage your money and, you know, how you set yourself up so you are ready and you're prepared. And I'm happy to do it for people on here as well, but I'll look at all of your specific situation and kind of coach you specifically on how to position yourself the best.
That's awesome. You know, just to follow up to that too, because I did spend some time with Kurt and Michelle, and they're looking at a multifamily dwelling. And I was just thinking that based on the discussion we just had on where rent and holds are going to be going, there should be a big opportunity. Billy, can you just comment, you and Becky, on multifamily, like 4plexes and 8plexes right now?
Yeah, so just remember, once again, that your 1 to 4 units up to 4 plexes, just remember that you can get regular purchase mortgage financing on that 1 to 4 units. Once you get above the 4 units, you have to go more to what we call commercial financing. Now, the advantage of multi-units, like for example, in their situation, the advantage of multi-units is you have multiple doors, which just simply means that if one's vacant, then typically the rest of them are not. And so that's always an advantage. The other thing that's an advantage is that you usually can hit your rent ratios. So if you're going, say, in a fourplex, I like to see positive cash flow, a minimum positive cash flow in a fourplex of about $150 a door, which is $600 a month. If I'm going up, let's say to 12 units, then I might. Now this means it's a really solid 12 unit building. I might be willing to sacrifice if the building's in really good shape and there's not a lot of rehab. It's got good tenants in it. I might be willing in the beginning to sacrifice at $100 a door. Now, let me just comment on one other thing. The advantage then on the exit strategy is with the 1 to 4 units, you can actually sell that to an owner occupant. An owner occupant purchase mortgage can actually purchase a fourplex as long as they're willing to live in one of the units. Now, when you look at the 8plex, for example, you cannot, or 12plex, you can't do that. And so that's one of the other things that you need to know, that if you qualify from a financial perspective, you can buy that fourplex with a purchase mortgage as an owner occupant, knowing you're gonna rent the other pieces. Now it's really easy for a duplex, but you can do it for a triplex or a fourplex if you're gonna live in it. Now was that Kurt asking that? I don't think Kurt's gonna plan on living in it.
No.
But you still, even if you're not, you still get the investor purchase mortgage. Whereas if you go above 4 units, it's going to have to be a commercial. And always remember this, the minute you go to a commercial loan, it's not valued on comps. Now they'll look at comps, but there's 3 ways to value property. One is sales comparisons, which is however single family home for sale to an owner occupant is valued. But then the other 2 are what we call replacement value and income value. So the minute you get up on the 8 unit, 12 unit, 30 unit, it's all going to be based on primarily on income. So that means you got to have enough rental income to cover it. I could talk about a lot of that. I won't, because I know I see somebody's raising their hand. I don't know what that means on here, and I can't read it because I don't have my glasses, but I see it says hand.
Means you've got lots of questions coming in. Thank you for that. All right, this is from Lynette. This is a great question. She says, in the refinance example you just answered, would it still make sense to refi by extending the loan to a 30-year loan if you've been paying already for 4 to 5 years? So basically you're down to a 25-year mortgage. Does it make sense to bring it back to a 30-year?
Well, I think what you have to do, so she's saying that she has 25 years, for example, left on her current mortgage.
Correct.
And would it make sense to refi on 30 years? The answer is yes, depending on what your goals are. So for example, your payment would, in this scenario, with the current rates, your payment, and my guess is it's going to go down, and you may save, depending on the size of your loan, you could save, easily $100, you could probably save, I'm trying to think, on an average, on a $300,000 home, you may be able to save $350 a month. So when you look at that, then your cash flow, Lynette, goes up if you do that. That means your monthly cash flow goes up. Now, I have friends back in the day that were investors, and they bought all their rental properties on 15-year loans. So what they did was they sacrificed their monthly cash flow to get those homes paid off in that 15-year period. Right now, most investors, though, they play the cash flow game, just so we're clear, they play the cash flow game, then the appreciation game, and then they play the tax game where they 1031 into properties, and if you buy right and you hold right, you're going to get some appreciation. And so, and you're going to get a lot of depreciation if you're doing it right. And so they 1031 into other properties. And I know that I'm not talking about what a 1031 exchange is, but it's basically a vehicle you can use to exempt yourself from the gains that you have on house. So if a house goes from 100,000 to 200,000 and you were to sell it, then you don't have to pay any capital gains tax on that extra 100,000. But in addition to that, you don't have to pay any capital gains tax on the depreciation that has to go back and be recaptured. And so that's where really the 1031, the most powerful part of a 1031 exchange is not having to recapture or pay taxes on the recaptured depreciation. So I might have got off on that one. I don't know if I stayed with the question or not.
No, that's really good. And, just looking ahead too, it's really interesting because if you get locked in, and we talked about this during the real estate workshop, if you lock in at that low interest rate that we talked about, Bill Bronchek was talking about this, and you see rent and holds rising in the future, even if that value of the property is fluctuating, you still have your cash flow and that fixed interest rate for 30 years. You can ride out the fluctuation of the value of the property. It'll go back
Absolutely.
up. But your cash flow is actually going to be in an improved position. So sometimes what I've seen is that even though values of properties are going down, rents are going up. So your cash flow's at its peak, even when the value's going down.
And that's and if somebody will go back and watch the live streams that we've done, I've given many charts showing historically proven facts, how that rents have continued to go up even while property price. Because I always remember this, when people lose property on foreclosure, they still have to have somewhere to live. So they'll go to rents. And so rents always stay. It's amazing. And the only time we really saw rents go down, we didn't see rents go down in the Great Recession. Historically, the only time we really saw rents go down was the Great Depression. And so the point being that you can be protected by refinancing if you're going to be, I call it a serious real estate investor, and you're going to buy and hold.
Yeah, it's really good. I think there's a lot of opportunity. Okay, this question is coming in. It says, in high demand areas like the Florida coast, where people are moving from New York City, which we've talked about, that people are getting out of the city, do you see real estate values increasing ongoing, or do you think that those values will drop as well?
All right. So that goes back to, we talk about knowing the best markets to buy in, right? And so we talk about the rental income helps determine that. The median income of the area. The Florida coast is one of the unique areas where the money that is driving the prices many times is outside of the immediate local economy. So in that case, when you're looking at let's say the Florida coast, you have to look at the national economy and then consider foreign investor money, because it's driving some of those prices as well. Now, because of that, in most cases, unless we have a great recession that hits us like we had in 07, 08, in most cases, unless we have a great recession, those prices will typically hold up. And here's the kicker about them, especially that Miami coast, especially there, when real estate does start coming back, it's going to come back. And so, so the way I look at that is right now, let's see how this current situation is going to start affecting some of those properties. And once again, this is where patience is important. Now, Becky and I have even thought about buying a property in Florida just for fun, to go down there. But I'm telling you, when I go to look at a property, I'm not going to lose my mind. I'm going to keep my ratios in mind. I'm going to keep the sales comps of like kind of properties in mind. And then I'm going to look at kind of the environment that I'm in. And if you do that, you could actually, I believe it's coming up where some of those properties, I like beaches actually better now, good quality beach areas better than I do ski areas. And I used to like ski areas more, but the only thing about Florida you have to remember on single family property is your hurricane insurance can eat you alive. So if you're going to rent it at all and use it as a rental property, you have to factor in that hurricane insurance costs, because it and the property taxes combined can take a big bite out of your cash flow.
Well, too, isn't it, when things start getting tight, if people have multiple homes or second homes, those are usually the first to go.
The second homes are the first ones to go. And so in some cases, people actually lose them in foreclosure. And so it depends on how in a place like Miami, you've got national and international money driving it, as opposed to, say, a nice vacation area in an area that's not really in high demand from a foreign perspective. Sometimes those properties are still dependent more on the local economy. But places like Miami, that Miami Beach area, all up and down it, probably, 20 miles inland, not just right on the beach, but surely if you're 5 miles from the beach and going in, there's, those are pretty valued properties.
What do you think about vacation or executive rentals in those beach areas compared to a rent and hold?
Well, I think VRBO is here to stay. I don't know if Airbnb is and on those vacation. And so I think the area, and of course, Karen teed that one up for me. So I think in that area, the way we always factor it is we like to see you be able to pay for whatever your costs are. I'm using that term very, very intentionally. Whatever your costs are to own that property, if you can pay for it, either in executive rentals, or in this case, we would call it vacation rentals. I'm intentionally avoiding Airbnb, even though Airbnb is still obviously very valid right now. I don't know what municipalities are going to change their rules on Airbnb. But with that said, if you can pay for it in 16 weeks, cover your cost in 16 weeks, then that's a good determinator on exactly whether or not you should purchase the house. And by the way, guys, that includes even if you have the ability to pay cash. Okay, because what you're looking for, always remember this in real estate, you want at least 2 exit strategies. So even if you're paying cash and you say, well, I don't want to overpay, that's how you can tell. Go and look and see what you would get in the peak weeks for rental for that property. And for 16 weeks, can you pay all your costs? If you can, then my opinion would be, generally speaking, even if you're a cash buyer, that's a good value. I just gave them something worth the price of the whole ticket. I mean, maybe worth the price of 20 tickets.
Well, right here, really if you subscribe
subscribe,
you can get keys to finding bargain properties.
Yeah, and so I just gave you, I don't know if you know this, but if it applies to you, that's worth the price of the ticket.
Yes, I was thinking it. I'm glad you said it.
Well, you teed me up. So
That's really good. Okay, we've got a question coming in from Chad, and this is what it is. We have about $250,000 sitting in our checking account and no debt. We want to put that money to work. Where's the best place for us to look right now?
Well, I would keep my powder dry. If you have $250,000, unless you're going to get in some kind of fixed income investment, not with the whole 250, but with just a portion of it, you might, if you can get a decent interest rate. By the way, we're doing that on Tricord right now, where you get a decent interest rate. But I would say right now, I'd keep my powder dry and let's see what's going to happen in the market. And, obviously you sound like a good steward of your finances if you have no debt and you have $250,000. And so now always remember this for all you conservative folk that are watching me today. Always remember that money's not static. And you say, what does that mean? That means if you have it sitting in cash, now right now it's smart to sit in cash, but generally speaking, you want at least some of that money invested so you're getting a better return on money, because in normal environments, you've got a little bit of inflation. Now, we haven't really been in an inflationary environment of any consequence for quite a while now, but inflation itself is eroding your money. So if you put it under a mattress, the value of the dollar actually goes down to you, as an investor, or as a person who's holding the dollars. So always look at different ways to invest it. And we're going to do some more live streams on that as well, as far as,
Investing.
the value of money. Like, here, even here at AWM, I'll just say this, we looked at, Andrew, he doesn't like to take any kind of money from the government, but I was telling him, I was talking about the future value of money the other day, because the government they're really wanting to give us some money, not on the PPP or any of that. That has to be paid back like that. But the reason I'm saying it is I talked about future value and present value in the discussion. And I could tell, man, the ears perked up, because $1 today typically is worth more than, let's say, a year later, that dollar is worth more, typically, if it's invested. And so that point is, then if that's the case, if I don't invest it today and it's going to be worth this much later, then how much is that dollar really worth today? It's called present value. And so that's the way you have to start thinking about money, if it's just sitting in cash. But right now, you need to stay in cash.
Wow, this has been phenomenal, and our time is already up. I just want to remind everybody that Billy goes live on Wednesdays at 1 p.m. Mountain Time, 2 p.m. Central, and any questions that we didn't get answered, he will cover as many as possible next Wednesday. Also, this is just a time, this information, Billy and Becky, that you're providing, people need this. So I want to encourage you, if you're watching, please share this live cast with your friends. They can join us live every Wednesday night at 6 p.m. Mountain. And this is information that people, I'll just tell you, pay thousands, if not tens of $1,000s to get. And the nice thing about Billy and Becky is they are doing it just because they want to help us. So their heart is pure. They're not out there they don't need to make money off us or anything. They're just here to help us build wealth in the kingdom. And so with that, Billy and Becky, I'm going to turn it over to you to close us out tonight.
All right. Well, thank you, Karen.
Thank you, Karen.
We appreciate it. And so we're going to pray tonight.
Amen. I think we should.
You think we should?
I think we should.
Well, we are.
There's a lot of unknowns, and people need to know.
We are in unprecedented times. And I'll say, Karen, I think I put my glasses and I saw, I think it was Tim Cassidy that raised his hand. So if he had a question, just make sure you get that and forward it to me, and I'll be glad to reach out to him.
You got it.
All right, let's pray. Father, we speak today blessing and increase over your people. We thank you, Lord, for this Wednesday night live stream, for touching people. We thank you that today we say Psalms 5:12 is true, that we're surrounded with favor as a shield. And we thank you for that as we speak over people's lives, their homes, and their families. In Jesus' name, amen.
Amen.
Bless you. We'll see you right back
See you next
here.
week.
Bye-bye.